A surprising truth lies hidden within the real estate landscape. While traditional single-family homes and sprawling commercial complexes dominate investor conversations, an often overlooked asset class consistently delivers robust returns. According to industry reports from Marcus and Millichap, mobile home parks have historically boasted some of the lowest default rates and highest occupancy levels across all real estate sectors, often yielding double-digit cap rates in markets where conventional properties struggle to reach half that. This peculiar stability, however, comes with its own unique set of complexities, presenting a formidable barrier to entry for the uninitiated. The sheer scale of this opportunity is underscored by the National Association of Realtors, which notes a persistent and growing demand for affordable housing solutions across the United States, a gap that manufactured housing communities are uniquely positioned to fill. What if you could navigate these complexities, decode the nuances of zoning, infrastructure, and tenant relations, and unlock the immense potential for stable cash flow and long-term appreciation that mobile home parks offer? This is precisely the path one astute investor embarked upon, transforming an unconventional niche into a cornerstone of their financial freedom. Their journey reveals that mastering specialized real estate investing isn't about chasing the latest trend, but about deep understanding, meticulous due diligence, and strategic execution in an asset class many overlook. It demands a different kind of vision, one that sees opportunity in what others perceive as disadvantage. Mobile home parks, often referred to in the industry as manufactured housing communities, are essentially land investments where residents own their homes but rent the underlying lot. This fundamental distinction shifts the operational paradigm dramatically. Unlike apartment complexes, where landlords maintain the structures, park owners primarily manage the land and infrastructure, significantly reducing capital expenditure on building maintenance. This model forms the bedrock of their appeal, offering a consistent revenue stream from lot rents. The investor typically holds title to the land, roads, and utilities, while residents own their individual manufactured homes, creating a unique owner-tenant dynamic. The inherent stability of this model manifests in exceptionally strong cash flow. Residents, having invested significantly in their homes, exhibit high retention rates due to the considerable cost and effort involved in relocating a manufactured home. This translates into predictable income for the park owner, often insulated from the higher turnover seen in other rental property types. This creates a powerful engine for passive income, a critical component for achieving financial independence. Furthermore, the land lease structure means property taxes are often lower compared to fully developed residential properties, further enhancing net operating income and improving the overall return on investment, or ROI. Acquisition strategies for mobile home parks often diverge from mainstream real estate. The most successful investors frequently target off-market deals, leveraging direct outreach to existing owners, many of whom are nearing retirement or are simply burned out from management. This direct approach bypasses competitive bidding wars and allows for more favorable negotiation terms, a cornerstone of value creation in this niche. But here's the catch. Identifying these properties requires extensive local research, building relationships with brokers specializing in this asset class, and networking within local communities to uncover opportunities before they hit the broader market. It's a proactive, boots-on-the-ground methodology. Once a potential park is identified, the due diligence process is rigorous and highly specialized. It extends far beyond a typical home inspection, delving deep into the park's infrastructure. Investors must meticulously assess the condition of water, sewer, electrical, and road systems, as deferred maintenance in these areas can lead to significant unexpected capital outlays. For instance, an aging septic system or outdated electrical grid could require hundreds of thousands of dollars in repairs or upgrades. Environmental assessments are also paramount, particularly for older parks, to identify any potential liabilities from past land use. This thorough investigation mitigates unforeseen risks, ensuring the park's foundational elements are sound. Central to evaluating these opportunities is understanding the cap rate, or capitalization rate. This metric, calculated as the net operating income divided by the property's current market value, provides a quick snapshot of the potential return on investment if the property were purchased with cash. For mobile home parks, a strong cap rate, often in the 8% to 12% range or higher, signals a robust income-generating asset. Investors also scrutinize the cash-on-cash return, which measures the annual pre-tax cash flow against the total cash invested, offering a clearer picture of liquidity and how quickly initial capital might be recovered. These metrics provide vital insights into a park's financial health and profitability potential. Financing mobile home park acquisitions often requires a specialized approach. While conventional bank loans are available, many investors leverage commercial real estate loans or even seller financing, particularly for smaller parks where traditional lenders may be hesitant. The debt service coverage ratio, or DSCR, is a critical metric lenders evaluate, indicating a property's ability to cover its debt obligations from its net operating income. A DSCR typically above 1.25 is often required, ensuring a comfortable margin between net operating income and debt payments. This careful financial structuring is key to maintaining stability and attracting favorable lending terms, a crucial aspect of scaling an investment portfolio. Post-acquisition, the investor's focus shifts to value-add improvements. This isn't about lavish renovations, but strategic enhancements that boost lot rents and park appeal. Examples include upgrading common areas, improving road conditions by repaving or patching, enhancing landscaping, or even adding amenities like laundry facilities or community spaces. These improvements directly correlate with increased net operating income, thereby raising the park's overall valuation. A common and highly effective strategy involves infilling vacant lots by purchasing used mobile homes, rehabilitating them to an attractive standard, and then either selling or renting them to new tenants, thereby converting unproductive land into immediate revenue streams. Effective tenant management in a manufactured housing community requires a deep understanding of state-specific landlord-tenant laws, which can differ significantly from those governing traditional apartments. Lease agreements must clearly delineate responsibilities for lot maintenance, utility payments, and park rules, which often include provisions for home aesthetics and safety standards. Establishing clear communication channels, implementing fair and consistent rule enforcement, and fostering a sense of community among residents can significantly reduce turnover and enhance the park's reputation, contributing to long-term stability and profitability. This proactive approach to community building is vital. The market dynamics for mobile home parks are also compelling. Demographic shifts, including an aging population seeking affordable single-story living and increasing demand for cost-effective housing for younger families, continue to fuel the sector's growth. Experts at the Manufactured Housing Institute highlight the persistent undersupply of affordable housing nationwide, positioning mobile home parks as an essential and increasingly sought-after solution. This underlying demand provides a strong buffer against economic downturns, making it a resilient asset class. The investor who sees this trend understands they are not just buying land, but providing a crucial housing solution. Consider the narrative of an investor who, after acquiring an underperforming park with numerous vacant lots and dilapidated common areas, implemented a systematic upgrade plan. By investing in new signage, repairing potholed roads, introducing a professional management system, and actively marketing vacant lots to new residents, they were able to raise lot rents to market rates over several years. This strategic repositioning not only dramatically increased the park's net operating income from $50,000 to $150,000 annually, but also significantly boosted its valuation by several $1 million, demonstrating the power of hands-on management and value creation in this niche. The long-term financial implications are substantial. With consistent cash flow and strategic value-add initiatives, investors can leverage the power of compounding and property appreciation. Furthermore, the strategic use of a 1031 exchange, a powerful IRS provision, allows investors to defer capital gains taxes when reinvesting proceeds from the sale of one investment property into a like-kind replacement property. This enables continuous portfolio growth without the immediate tax burden, accelerating wealth accumulation and cementing financial freedom across generations. This tax-advantaged reinvestment is a cornerstone for building substantial, lasting wealth. Despite the attractive returns, risks exist within this specialized sector. These include the potential for significant capital expenditures for infrastructure repairs if due diligence is insufficient, local zoning changes that could impact future development or expansion, and the complexities of managing a diverse tenant base that may require more nuanced interpersonal skills. Effective risk mitigation involves thorough upfront analysis, building a strong reserve fund for unexpected repairs, and understanding local political landscapes and community sentiment. A realistic acknowledgement of these challenges is crucial for sustainable success alongside proactive planning. For those looking to enter this market, the initial steps involve extensive education and networking. Attending industry conferences, joining specialized real estate investor groups focused on manufactured housing, and seeking mentorship from experienced park owners are invaluable. Understanding the specific regulations in target markets, from rent control ordinances to permitting requirements for new home placements, forms the bedrock of a successful entry strategy. Developing a robust financial model that accounts for both current income and potential value-add expenses is also critical before making any offers. Ultimately, mastering mobile home park acquisitions is a testament to the power of specialized knowledge and disciplined execution in real estate investing. It challenges the conventional wisdom, proving that significant financial freedom can be forged in markets often overlooked by the masses. The investor who achieved this freedom didn't just buy properties, they cultivated communities, optimized operations, and understood the intricate dance between tangible assets and human needs, creating a legacy of stable income and appreciating wealth. The journey from identifying a distressed park to transforming it into a thriving community reflects a broader principle applicable across all real estate ventures. Wealth creation is often found where others fear to tread or simply fail to look. This niche, with its unique blend of operational demands and stable returns, offers a compelling blueprint for those willing to learn its specific rules and apply strategic, focused effort. Aspiring investors should begin by identifying markets with strong demographic trends, robust job growth, and a scarcity of affordable housing options. Researching local ordinances and consulting with specialized real estate attorneys are non-negotiable prerequisites to understand the legal framework. Building a team of experienced professionals, from property managers to infrastructure contractors, will be instrumental in navigating the operational intricacies and realizing the full potential of these valuable assets, ensuring smooth transitions and efficient management. The enduring appeal of mobile home parks as an investment vehicle lies in their ability to provide consistent income, offer significant opportunities for value appreciation through strategic management, and serve a fundamental societal need for affordable housing. This combination creates a resilient and rewarding path to financial independence, proving that mastery in a niche can indeed lead to extraordinary wealth. By understanding and embracing the distinct characteristics of this asset class, investors can unlock a powerful engine for long-term prosperity.